Welcome to the Sygnum Live Crypto Market Update. My name is Martin Burgherr and I'm the Chief Clients Officer of Sygnum Bank. Thank you for tuning in. Please note that none of the content discussed in this crypto market update is considered financial advice. Today, we want to discuss three topics. First, we will look at the Ethereum Shapella upgrade, which happened recently. Then, following the upgrade, we will look a bit into Ethereum economics. And last but not least, we will look at year-to-date performance of cryptocurrencies. It was an eventful year so far. We had the US banking crisis. We have inflation rates still not under control, and crypto performed actually quite well. And we will look at what is driving this. So let's start with the Shapella upgrade. It was long awaited, and with the Shapella upgrade, Ethereum stakers were actually able to unstake the staked ETH for the first time. It was long awaited. There were also a few delays, but now the upgrade went smoothly. It's live, and people can now unstake Ethereum. Now, there were many speculations about what is happening around this upgrade, because of course quite a lot of Ethereum was also locked, and some people expected that there will be quite some sell pressure after the upgrade, because quite a lot of people, they probably would take this opportunity to unstake. Now, interesting enough, we didn't see this. Overall, I think we saw quite some positive price movement leading to the upgrade, and also now after the upgrade, we don't see any major correction. If we look at how much Ethereum is unstaked, it's actually a reasonable amount. So it's not such a lot of Ethereum which is being unstaked, and this probably also explains why there is not a lot of sale pressure. Interestingly enough, around 1/3 of all Ethereum unstaked following the upgrade has been unstaked by Kraken. I think this might be a sign or that some people, they are a bit afraid of the regulatory uncertainty around staking, and that's just an interesting data point I want to mention. What does it mean, the upgrade? Well, so far, if you staked Ethereum, you didn't know whether and at what point in time you can unstake it. Now, with the upgrade, basically unstaking takes 27 hours. Plus a queue. Right now there is still a small queue, but this queue is expected to normalize, and then we should have a 27-hour unstaking period, which means there are hardly any reasons why not to stake Ethereum now following this upgrade. Now, interesting enough, we don't see yet that the Ethereum staking ratio dramatically increased. I think we see continuous inflows, but on the other hand, we also see a little bit of unstaking happening. So it's more or less stable. As of today, I think there are roughly 14-15% of all Ethereum are staked, and I personally expect this ratio to significantly increase. As I said, I think following the upgrade with only 27 hours of unstaking period, there are actually very limited reasons why not to stake. Current yield is actually quite high. With MEV boost, the yields are roughly 6.5%, which is of course quite attractive. Now, let's look at some Ethereum economics. So the average staked Ethereum price is actually $2,138, which means we are now roughly around this price level. And this probably also explains why we see quite a stable evolvement of the staking ratio and not a lot of unstaking happening. When we look at the economics of Ethereum, it's very important to understand people, they actually pay a fee to use this network. I'm often asked, what is the value proposition of Ethereum and how do you justify its valuation? But people, they pay a gas fee to use this infrastructure. This gas fee is measured in GUI. Actually, so when you want to initiate a transaction, you pay this fee to the network, and then part of this fee is also being burned. Now, this is why Ethereum is such an interesting network, because you can actually look at certain KPIs and then also come up with some economic valuation models. Now, today, we see that at the current fee level of roughly 30 to 40 GWei, Ethereum is actually deflationary, which means more Ethereum is burned than newly created. And that's, of course, quite interesting because inflation is a big topic. And I think we also saw that following the US banking crisis, some monetary policies have already been loosened again. And with Ethereum, with a negative inflation, so with deflation effectively of roughly 1%, I think you have a very interesting value proposition and also some protection against this inflation. If we look at who is causing most traffic and who is paying the highest fees to the network, it's DeFi, followed by Ethereum transfers right now. Of course, that's also related to the staking upgrade. And then, of course, also all ERC20 coins and NFTs, they generate quite a lot of traffic and hence also pay quite a significant amount of fees to the network. Now, last but not least, let's look at the year-to-date performance of cryptocurrencies and Bitcoin in particular. It has been an eventful year. And interestingly enough, like following this banking crisis in the US, we saw a significant surge of particularly Bitcoin prices. So Bitcoin is up year to date 65%. That's quite substantial. And Ethereum is up 52%. What is interesting to observe is that actually Bitcoin really seems to have the most momentum of cryptocurrencies. We saw it 65% up versus 52% of Ethereum. And if we look at actually all the altcoins, they are clearly lagging right now. Bitcoin and Ethereum combined, they represent roughly 2/3 of the total market cap. And another interesting data point, all altcoins together have actually less market capitalization than Ethereum alone and less than half of the market capitalization of Bitcoin, which shows that the market right now is probably not anticipating that any alternative protocol will soon be serious competition for Bitcoin and Ethereum. I think historically, we also always saw that if some risk capital returns to the crypto markets, it first goes into Bitcoin. So this pattern that Bitcoin actually is leading the crypto recovery is not something which is very new, and it can be interpreted as a sign that the market is recovering. Typically, altcoins, they are of course an even riskier category within the crypto universe, and they typically only gain momentum at the later point of the recovery cycle. And at this stage, you're probably not yet, because I think we just see the beams of spring of the recovery. Now, what do we anticipate for the rest of the year? I think overall, we see that there is still quite a lot of uncertainty in general, primarily driven by inflation fears. And I think there, the next couple of months, they will be very decisive. We need to see how the central banks react to the general economic uncertainty also caused by the banking crisis, and whether we see now a peak or even a decrease of interest rates. If this is happening, I think we can be quite bullish on risk assets. I think many people are still waiting on the sidelines and wait to return into risk assets. So this could be a very positive momentum. Then also, it's actually now less than a year to the next Bitcoin halving. So now we can really start counting days. And the halving historically has always been very positive for the price momentum of Bitcoin. Why? Because basically the cost of mining a Bitcoin, they doubles. And this means that miners are incentivized, of course, to sell Bitcoin only at the higher price. So positive price momentum year to date. I think positive signs for the beams of spring. We are looking forward what the remainder of 2023 is bringing to the crypto space. Thank you very much for tuning in. If you like this update, please like it on our social and follow us on all our social media channels. Thank you very much and have a great day.